Okay guys, welcome to the FX Street webinar. My name's Ian Coleman. I'm one of the bloggers on the site, as I'm sure you all know. Today we're registered to just purely look at yen crosses, but as what we normally do, I just sort of cover currency pairs that I think are relevant, what sort of formations that we've got at the moment, what I can see breaking down or breaking up, and basically discuss sort of trigger points, and then forecast chart formations where we expect pairs to go, etc., etc., etc. On the chart here, we've got, this is actually just Euro Yen 1 hour chart. I've got some Bollinger Bands, and these are my own settings. I use a 15 EMA and a 62 EMA in my chart analysis. The reason why I use a 62 EMA is because it's as close to 61.8% as I can get, and I'm quite fanatical about SIB levels, SIB numbers. 15 EMA is basically as close as I can get to the 62, breaking it down into a quarter. And I use 4 hour and hourly charts, so you can see why I'm using those different EMAs, exponential moving averages, as I break down through the time frame. The 62 becomes a 15, etc., etc., etc. Also on my chart, I've got relative strength index, okay, with a 50 line across the middle. I'm not using the RSI for overbought, oversold. Through years of trying to sort of decipher the market, we all can see, or we all know, that the market can just keep on trending in one direction. It can be overbought, oversold for an extremely long period of time, especially the shorter time frames that we get into. So I do take note of it, but I'm not trading to it. Okay, I'm not trading those breakouts. What I am looking for is I'm looking for moves across the 50 level to show me a bullish or bearish bias. I'm a trend follower. I'm not necessarily looking to scalp. Okay, the DMI, which is the next one down here, just for those that don't know, the DMI is a fully different oscillators or indicators across the bottom here that obviously have different uses. Parabolic ZAR, which is the support and resistance, is a system to trade to. Okay, when you've got green dots, it's bullish, red dots is bearish. It's as simple as that. With regards to directional movement indicator, it is a trading system. Okay, you don't have to mess around with it. When it's red, you should be selling, and when it's green, you should be buying. It's as fair as that. Obviously, you can see here, goes red to green quite often and then jumps back. So like most indicators, it lags the market. It's not fantastic, but why I like to use it, I like to use it for confirmation. I'd like to use it for confirmation that I'm on the right side of the trend, that I'm looking to the right way, that I'm not jumping in too early. And that is also what it has a tendency to save you from doing. It has a tendency from saving you from jumping in too early, because it uses the ADX, okay, and it takes into account the strength of the previous trend, and it is quite a complex indicator. MACD, next one in line, purely for divergence. I don't use it for crossovers, anything else like that. And momentum, I like the momentum indicator. Again, the momentum indicator has no overbought or oversold parameters. It can just keep on going in one direction, which is one of the reasons I like it. And it also, I want to see, when I'm in a trend, I want to see the momentum indicator moving aggressively in the same direction as I am, or as the trend is. I don't want it flatlining like this. This is showing that this whole move has no momentum. Okay, MACD shows there's no momentum. These are chopping sideways. Okay, RSI is flat on the 50 line, we can see that this trend is weak. Okay, this was obviously last week. Okay, the sell-off in euro yen, and this came obviously with the trouble that we had in Egypt. We still got in Egypt. It hasn't gone away. It seems to be escalating, if anything. But the market has calmed down. Obviously waiting for Trisha as well today. So I'm basically going to try and talk you through how I get my views. Okay, how I break down my currency pairs. I also am looking for correlation between the pairs. Okay, if I'm looking for euro sterling to get a bias on the euro and the sterling on the dollar pairs. Okay, I'm looking at indices to get a bias on the yen pairs. Not so much these days though, because they can have a tendency just to move in opposite directions. But Aussie yen is obviously still closely watched for the carry trade, and obviously oil for dollar CAD. Okay, so let's break this one down. So those are all my indicators. Like I said, I use Fib a lot. I like Elliott wave, but I have more of a bias towards Fibonacci levels due to Elliott wave, because on numerous occasions Elliott wave says that wave 4 cannot break wave 1, but a lot of the time wave 4 will break wave 1, but it will still rally to 261.8%. So I'd look more to formations and Fib levels than I would just to be a sort of hardcore Elliott wave theorist, if you like. Daily, I do go further out. Okay, I do occasionally look at a monthly chart. Monthly candles, you'll get some very relevant monthly candles, which are called AMRs, which are acute monthly reversal candles, and they're not to be ignored. Obviously, with the yen pairs, we've got to be a little bit careful because we did have some Bank Japan intervention a while ago. But here, that's a sell setup on the monthly candle. Obviously, doji middle, when she breaks that level, that first candle, 1, 2, 3 candle setup, she breaks that candle there, 163.70, and she moves lower. Obviously, numerous spikes. You see how the 15, even on the monthly, holds and keeps this pair to the downside. DMI, these are all low. Okay, there's no divergence. There's nothing suggesting on the oscillators that this trend long term is going to change. But I'm breaking, like I said, I'm breaking down candles. Now, my favourite candle formations aren't dojis, which give a bias to the upside or the downside, obviously depending on whether or not they're green or red. And inside candles are known as aramis, okay, and they can basically show that the market's moved too fast in one direction and it will reverse back. Here's an arami candle here, not the best one. Okay, so she's in the inside bar, she then breaks the top and she moves to the upside. Here we've got an engulfing red after dojis, and she moves to the downside. Here, last month, we had an engulfing green candle. Okay, so even though I've still got a bias to the downside on these oscillators, I do think that we're at least in for an ABC correction up. Weekly, here again, breaking down Fib levels. This is 261.8% here. But if you note here, 1, 2, 3, 4, this is what I'm saying about not taking too much notice of it. Wave broke the bottom of wave 1. Okay, 1 there, 2 there, 3 there, 4 there, 5 there. And notice as well that obviously 2, 3 should be impulsive, and that's not really impulsive. But what I have got here, 106.91, okay, I've got 261.8%, which is what I'm wary of. Move up, doji off the support, but we're still holding support here. Okay, we're just moving up. Notice how we've got divergence. Okay, not quite there on momentum, but we have divergence. We're nearly there, nearly there. Notice how they're all pushing on these break levels. I mean, that's virtually gone now. So that's given me, I've got a week, obviously monthly bias to the upside. Weekly is trying to push higher. I'm virtually ignoring last week's candle because this is my support line now. Okay, I've broken through. Resistance now becomes support. So I've got support at 11135. But, okay, there also is buts and maybes. Let's get rid of these. Notice how that trend line broke. Okay, I had an X on there from the other week, basically showing when you should have got long. Here it broke the 50. DMI went positive. There's small divergence across on the MACD, and momentum went positive. So at that point there, it sent this pair higher. Okay, and these indicators are still higher on the daily chart. I'm looking for a move up towards this sort of level. Okay, because I'm looking for an ABC formation. So just to show you how we get that, I'll take it in a colour that we can see a bit better. To take it from the low up to the high, impulsive, corrective. This is also what we want to see. Okay, the next wave up should be impulsive towards this sort of level. Okay, 117.12 is the target area, but okay, is it going to hit there? Is it just going to straight rally up? My long-term view is bullish, but it doesn't mean that my short-term view has to be bullish. And then I break it down into shorter time frames. Okay, here before I had some decent fibs. I had 1, 2, moved up nicely. Just moved down last week, but it was too quick for me to see how this wave has moved. This is a very corrective manner. Okay, DMI has started to show a negative bias, or still holding on to the negative bias from last week. Okay, tree shape, swinging and tightens. We know that we're going to get, sooner or later, we're going to get an impulsive breakout in one direction or the other. And be very careful when she breaks, because a lot of the time the first break is a false break on Bollinger's. So I'm looking for this trend line break. Okay, I'm looking also for, obviously my moving averages have gone flat, but what will normally happen, okay, on a positive breakout is she'll go through and she'll close through the 62 EMA with a negative candle. I don't want to see a doji, okay, and it will normally be on the second occasion. So here, move down, hit the 62, and we bounce. By the way, the 15 and the 62 will act as support and resistance level. You will get kisses off it. I mean, you can take it all the way down into sort of 1 minute, 3 minute, 5 minute time frames and look for reversal candles off 15 and 62 in most currency pairs, and it will give decent risk reward. So here it bounces, moves back up. The second break, if you look down, okay, we clear, we've broken. All indicators at that point are negative. Okay, MACD is down, we're through on the DMI, etc., etc., etc. Okay, comes back to test the 62 and then breaks lower. Now in this corrective manner here, we can also see a wedge formation that has a bias to break to the downside. It's not the best wedge because I prefer wedges to be higher. This is a bit of a flat wedge, but it is a wedge formation nonetheless. What will normally happen, okay, we'll come up, we'll break through the 62. Now, as long as she doesn't make a higher high, because we can see here, she broke through the 62, but then she came back and she made a higher high. We know from trend formations that in a downtrend we get lower lows, lower highs, and in an uptrend we get higher highs, higher lows. So as long as she's making higher highs and higher lows, so I'm in an uptrend. Here, she breaks through, okay, off the trend line. She then moves back up. Again this morning, She spikes through. I haven't got my full signals, but she just moves back up. What I'm looking for, I'm looking for the price not to take out the high, okay, and to break through, show negative on the on all my oscillators, and then I'm looking for a move down towards this level, 11031. Now this is only temporary. I only think that she's going to move down there before the next rally up. And look, the next rally up, I'm looking for this level, so 11700. So I move down towards this sort of level, 11032, okay, and then I move back up of about 700 ticks, okay, and I'm looking for correlation between my different currency pairs too. Just because I've got a view that I should be selling euro yen, I want to look at euro dollar. Should I be selling euro dollar short term, long term? What's my view there? Okay, because I know there's correlation between the pairs. So I'm expecting a spike down to around this sort of level, which also happens to be the bottom of the Bollinger Band at the moment, 11054. Okay, and then a push up. Any questions? It might seem complicated, but basically what I'm trying to do, I get a bias off the long-term time frames. I then want my short-term time frame to line up with that bias. But if it doesn't line up, do I stand aside, or do I take short-term signals? I still want to take short-term signals as long as it's all adding up in the same direction. Okay, because of that, I'm going to show you euro dollar. Point C. Never mentioned point C, did I? Oh, here, I think a small correction back down with 62 holding, spike through, and then point C. Point C being an ABC correction. And then after an ABC correction, I expect it to come back down. No, there's no fib levels. It's actually it's an ABCD. Is how you properly got to get rid of that there. Is actually how they're properly listed. Ignored it. I'm told off for this. I have 15 on the RSI. I have 12 to 9 on that and 15 on that. Because I've got all my settings at 15. I'm trying to get near the fib levels. Like I said, I'm fanatical about Fibonacci, even to the point, okay, where obviously the normal Bollinger Band is a 20 SMA, okay. Standard deviation is normally 2 minus 1.8. I don't really want to watch whatever's a lot of that was working, so I put on a 17, then I put on a 21, and blah 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 blah. These moving averages work well in every single currency pair, commodities, indices. So I don't have to curve fit them. I just use them. I just trade to them. I can see here. I mean, how many times it hits? Okay, it holds the support, and then she rallies up. She very rarely will hit on the first occasion and go straight through. Normally, you'll get bounces. This might not be the best to show. But even here, like she's in order. Okay, she keeps on coming and testing and testing. She can't break, but she needs to clear through. And she just keeps on bouncing up. And then here, she rejects. It does take a bit of getting used to. I'm not using them as moving averages. No, they're not conflicting. The trouble is with a lot of, I explained at the start that I'm looking for trend, and because I'm looking for trend, I'm building up a picture in my mind. I'm then trying to get confirmation. Every indicator that I've got gives me indication, gives me confirmation. What so many people do is they jump on too early, okay, before the trend is confirmed. Everybody, all novice traders, are looking for tops and bottoms when they should be looking at continuation patterns. There is nothing in cable, absolutely nothing in sterling dollar. that says you should be looking for a short yet. Okay, even though I do think you should be looking for a short very soon, which I put in the report earlier on. But just trading to the bias, you've got to have a bias. Until that bias changes, you've got to take either buy signals or sell signals. Okay, here there is no bias. I have a slight bias to the downside off the chart formation, but it's as choppy as hell. So there is no bias. So I'm going to show you cable. If you try and fight the main trend, you will lose, because the market has not told you that she's changed that trend yet. It's very hard with intraday moves. Even hourly charts can form noise, or she'll look like she's going to trend change, and all it will be is a correction. Yeah, I prefer the moving averages to be pointing in the right direction, but if I break through that 62 EMA and I close below that 62 EMA, and I've made a lower low or a higher a lower high or a higher low, then that will normally be good enough for me to start thinking that there's a trend change emerging. Because you've got to remember, moving averages are great, but to actually wait for a crossover, you've missed the bus. I mean, the train's left the station. See, I'm saying that I need the trend to be confirmed. Yes, I do, but not to wait that long. The momentum indicator is literally zeros. It's the zero line. Okay, obviously when you're trading above, then you should be bullish. Trading below, you should be bearish. But what is very, very good for the momentum indicator is the slope. You notice here that she's right above the overbought all the time. Okay, MACD starts to move off, and the momentum indicator starts to move off, and you'll normally see that in a wedge formation. Wedge formations are one of the best reversal patterns. Okay, MACD will drop, okay, but momentum indicator will drop even more, because it's showing a move to the upside is lagging. And I'm just going to show this. Okay, we've all went on about the head and shoulders formation that didn't hold. We've got 261.8% here. Okay, 1, 2, 3, 4. Now we're talking about inside candles. Okay, and getting a bias off the chart. Now this is positive. This isn't. Okay, that's turned over. Momentum's positive, but here, this is an inside candle. Okay, so even though you've had this impulsive move down, you can still be seen as 3-4. Okay, then you get this inside candle, and that gives a bias to the upside when the high is taken. Okay, the high is taken, but it's a doji. But she moves down, she never takes out the low, and then you get this impulsive move up. So that formation there, you've got to learn your chart formation, is an insider army, and that's a bullish signal. Here we're getting engulfing. Here we're getting engulfing green. These are bullish signals. You get them at the start and at the end of trend. There is no signal here to sell. Okay. 4-hour chart. 1, 2, 3, 4. Then I'm looking into subways. I've got 261.8 off here, 161.82. Broke a weekly trend line. Okay, subways. 1, 2. This was 3, 4. Here, anywhere from here to 136, 163.65, you've either got to be buying with extreme caution, or you want to be looking for turnovers. Okay, this chart is still positive. Okay, it's still moving to the upside. 1-hour chart. Let's get some of these off just so that we can see a bit better. Okay, what's that? It's not rocket science, is it? This is a system. Okay, it breaks the line here, here, here. Everything is positive. Goes through the 62. The second time, okay, one made a lower low. A higher low. Remember? I was saying it then went up to the upside. This system is now bullish. Moves up. Corrective flag. Moves up. All bullish formations. There's no reversal candles in here whatsoever. There's an inside green, okay, inside red there off this this weekly trend line, which is a warning signal. But the inside red then has to have another another red, continuation red. She doesn't get it, she moves up. Bullish green, okay. This is a warning signal to me. You've got an inside red with a closing red underneath. How long have we got? We've only got another half an hour. But can I take sell signals? No, I can't. I'd love to pick tops and bottoms, but over years of trading, I find it impossible. What I find a lot easier and a lot less stressful is to just go with the trend. Okay, to have a view when the trend's going to finish, and then just trade to it. If I try to pick tops and bottoms, my account will get depleted. Yeah, I believe you're true, Harry. And sometimes what looks like an ABC sequence will end up being a 1, 2, 3, 4, 5 sequence, etc., etc., etc. I'm not crazy about Elliott Wave, like I said earlier, and we'll get crossovers and we'll get all sorts. I'm more worried about fib levels. Elliott Wave, if you're looking to it or if you find it, she will warn you about buying into the end of the trend. And if you buy now, I believe you're buying into the end of the trend. I believe this is going to turn over. But can I sell it yet? No, I can't. I need to at least get through this level, 161.39, which also happens to be this little swing low here. But I'm expecting a turnaround pretty soon, and I'll then be looking for this level, 158.12, because it will be my support level on my daily chart, and it'll also be the bottom of wave 4. Okay. Long term, I've got this weekly triangle. I don't think she's going to close above it, so I think that we could make a move back down here. I think the head and shoulders is just going to be a bit dislocated. I think she's going to move lower. I think we're going to get a very good spike this week, just through this weekly trend line. And this is a symmetrical triangle formation, which after a move down had a bias to break to the downside. So it's building up pictures on our charts to give us a bias, but don't trade against the bias. Okay, if you don't want to buy, if you want to be a seller, but the indicators, the oscillators, the formation is still to the upside, you've got to wait. As far as I'm concerned, you've got to wait. Okay, it's a game of patience. It's like playing cards. If you chuck all your money in on the first hand, and somebody else has got, I don't know, royal flush or whatever, you're gonna be out of the game pretty early. You're better off taking your time, waiting for the big players to show you where they want to take the market next, and then jump on and ride the wave, because we are all far too small to move markets, that's for sure. Everybody all right with that sterling dollar, by the way? So I think, yes, I would not be buying it now. I am looking for selling opportunities. Okay. And I'm looking for buying opportunities in euro sterling, because I think this is just a correction in euro, which I'm now going to show you. So obviously, if I think this is a correction in euro, then euro has to rally higher. Sterling, I think, is going to come off. Sterling has to go lower. Euro sterling has to go higher. Not today. Euro dollar. Okay, here, and then again, it's building up pictures. Okay, here, again, this could be an ABC correction. It wasn't symmetrical, but if it is an ABC correction, then the next move should be to the upside. So this wave count, 1, 2, 3, 4, 5, that 5 count could be correct. But there's nothing to say that we haven't got a 5 count to the upside. I've actually got this labelled as a ABC correction at the moment. But getting into this, okay, going back to wave counts, this could be 1, this could be 2, this could be 3, this could be 4, that could be 5. And that's why I'm not particularly enamoured with Elliott Wave. Because what I do see now Well done, Harry. What I do see now, I do see 5 up. Okay. I see the move back down to between 50 and 61.8%. Okay, and then we zoom in. What is our bias here? Okay, corrective waves are in 3 waves. 1, 2, 3, 1, 2, 3, 1, 2, 3 makes A, B, C. Okay, 2 between 50 and 61.8%. I cannot for the life of me five waves down, which makes me believe that the next wave should be a 5-wave sequence up. Look how impulsive she has been. Okay, impulse, corrective, small, 38.2%. What did she hit? She hit 15 and she hit 62. She then gave us a decent outside green candle. She then moved to the outside. This was a spoof last week. Okay, 161.8%. I'm wary of this level, but I also don't think she's going to retrace too aggressively. Just get rid of that. Okay, because if she only pulled back that much for wave 2, I wouldn't have thought 3-4 is going to be that aggressive. But I'm still expecting some sort of correction off the top. Everything is bullish. Okay, this was the head and shoulders formation that we mentioned in the blog a while ago. Okay, she hasn't reached that target yet. That target would be 140 the figure. But I have got 161.8%. And I do expect a small pullback, okay, towards 23.6, 38.2. I'd have a tendency to look here, okay, 13664 at the moment, because I'm breaking my my 15, and she has a tendency to get attracted to these levels. What's happening? These are moving lower, okay. 1 hour, okay, 23.6. I've got 38.2 highlighted there. Let's just take these off. Okay, so I'm expecting a short-term correction. She bounces, she goes through, she didn't make a higher high. She's now closing below. But it's only a correction, and this correction would line up with my Euro-Yen correction, okay, towards 23.6, 38.2. And then here, I want to see the rate of change as well. Okay, that's the sort of first level, 137.29, for an ABC sequence, or an ABCD sequence, to be perfectly correct. But, again, you've got to look at time scale, okay? This was the start of the third wave, 18th of January. And it took to the 2nd of February. Okay, so you've got a 2-week period to form. You've got a 2-week period to form wave 3-4. 2-3. Is 3-4 going to be formed in 2 days? I doubt it very much. I think we'll see a very choppy manner coming down towards this sort of level towards the end of the week. After that, and then expect another run up. Obviously 142 everybody's flagging at the moment. I think we might push through and get 140, 144. Like I say, there's no reversal candles here. It's corrective. The wave is bullish. Momentum is high at the moment. Okay, just dropped off, showing a bit of divergence off this high, but that's only because of this pullback. Okay, any questions? So it's about building up pictures, correlating pairs. Okay, trying to get wave sequences, trying to get chart patterns, taking bias off larger time frame candles. What if we've got a decent 4-hour candle here? Probably not. But again, that's an inside red. Okay, so we've got an insider army there. Let's get on there a bit. Okay, so you've got an insider army off the top. She then breaks. This is a 5 SMA, which is just a simple trigger line. So she gets an inside red, and then she's moved lower. She's not taken that high. Okay, she's not closed above the 5 SMA. Here is an outside green. Okay, 5 EMA closes above to the upside. Aussie dollar. She's a beast, isn't she? Weekly. Weekly I've got 5 up, then a very strange ABC correction, and then I've got this choppy manner here at the moment. Obviously this week she's given us a bias to the upside. The weekly candle doesn't really give us a lot, monthly candle doesn't give us a lot either, I don't believe. Okay, the monthly is an inside red. So basically she would have to close and break below 9800 to confirm bearish bias, break and close above 10230 to confirm bullish bias. Daily chart, that was 261.8%. I'll put this in as a B extension, but this, I'm struggling with Aussie dollar, to be perfectly honest. I thought that was the top. I thought we were going to get a nice sequence down towards this sort of level, and she's just curving round. And this could be seen as a cup and a handle. We haven't made the handle yet, but if it is a cup and a handle, then the bias is still to the upside. You can see it better there. So this would be the cup. Potentially making a handle here. So if she doesn't take the handle bottom, which is 10054, then she could rally to the upside. I mean, cups are normally symmetrical as well, so you'd expect it to come to here and then round. The bias is to the upside anyway at the moment. There's no signals to sell yet. You've got a double top here with divergence. Okay, we've got divergence, divergence, divergence on all indicators. I'd be wary to buy into this high because of that. I've got an engulfing short term, I'm talking. I've got an engulfing red off the top, but I need to break here. I need to break and close below there. And if I could break and close below there, then I'd look down to this sort of level. Well, that would be my first target, obviously 10,000. And the breaker there, I'd look down to this sort of level, this confluence level. So you've got a chance of a short-term bear, but long-term bull at the moment. Dollar Swiss, I quite like the look of. Let's break it down again. Okay, weekly, not really good enough because she's not a fully engulfing green candle, but you can see inside bars at the moment. Notice how the 15 held again with the doji top, and she moved lower. Indicators are all forming lower, but we have divergence. Okay, so we've got divergence on all these indicators, which means that we could have the possibility of a break higher. Monthly candle, again, it was an inside green that gives no bias. Okay, got an outside red that gave a bias to the downside, and now we've got an inside green that has no bias. A daily chart, talking about symmetrical patterns. This was a butterfly formation. It's there. Okay, which started this rally up. Again, looking at our indicators, 62, we get an inside red. Okay, doesn't take out the high, closes below and chops around. So that is actually a sell formation. She then chops around, you get another inside red here. This isn't an outside green, nearly. Okay, again to the 62. closes below, moves down, etc., etc., etc. But here, yesterday, I think we have the start of a possible rally up, because this is impulsive, this is corrective, okay, which is giving us divergence on all these indicators. So then we're breaking it down through other time frames. Here you can see the impulsive manner. So this is impulsive, this is corrective. A couple of reasons why I don't think she'll go much lower. Chart formation, and Swiss National Bank's been verbally intervening in the Swiss franc as well. So I don't think she's going to let her take out the low. Not the greatest formations around here. Okay, we've got some decent spikes, but these aren't outside candles, so even 4-hour candles don't really give us a bias. But what we have got now, okay, on 4 hours, is we've got everything looking bullish. 1 hour. This was on the blog this morning, if anybody care to look at it. Okay, here, bang. This, by the way, was nearly a break signal, because she hadn't made a low, and then she broke through the 62, but look what she did. She just formed a huge spiking candle, and that's why we've got to wait for our candle formations to close. So I've done euro dollar. I think it's a small sell and then a large buy, and that engulfs that candle. So it's off the top and it engulfs. She then moves to the downside. Okay, hits the 62. First occasion, what does she do? She comes lower. When she breaks it on the second occasion, that's virtually an outside green, but not quite. Okay, but when she breaks it on the second occasion, we're then all bullish. Okay, 50, DMI, MACD, momentum. So from that point onwards, this chart is telling me to look for bullish formations, for buy triggers, blah, 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 blah. Okay, here, outside red. Okay, I wasn't around at that point. I'd called it a day. I'd already had a long trade on. It comes down. What does it do? When you get confluence of these moving averages as well, it is double whammy. Here, you get an engulfing green candle, which I think was about the time that I posted the report this morning, off the 15. We're now in order. It closes above 5 EMA. Everything is bullish. Okay, and when she moves to the upside, what can I see? I can at least see a head and shoulders formation. Support, support, head. This being the neckline, she's breaking through now. If you hadn't taken a long trade, then there's still a decent way to go. 95.62 is the target level for a full head and shoulders breakout. Okay, what happens most of the time, not all the time, but what happens most of the time when dollar Swiss rallies? Most of the time when dollar Swiss rallies, euro dollar will come off. Okay, the -1 correlated. You've obviously got euro Swiss. Euro Swiss does not flat line. It used to, because the Swiss National Bank used to hold it up. It doesn't these days. Okay, but in general, because you have dollar strength, Swiss weakness, you'll normally have euro weakness and dollar strength. Okay, to the flip side. So it's always worth watching formations in these two pairs to see if they line up together. Okay, so that's my target level on dollar Swiss, and I am in that trade. I'm not here as a tipster. I'm here to give views. Okay, euro Swiss. Again, we've got an inside green, okay, off the monthly, which is warning. Got a great outside red there as she moves to the downside. Okay, outside red there. The high was never taken. Moves to the downside. Obviously, all these chart formations work better, or work just as well on short formations. But you want to be taking them off the monthlies to get a bias. Okay, inside green here at the moment, which means it could go in either direction. Weekly, that, believe it or not, is a matching candle from last week. It does not breach It's not an outside red because it's very, very close. But no gold star. This is actually an inside green at the moment, which again, I think there's a bias to break to the upside. Dailies, what can I see? Again, I just lost that bit there. This was a butterfly formation. I don't need that on there anymore. Okay. What butterfly formations have a tendency to do is to retrace at 61.8%, which she didn't make. Okay, she only retraced between 38 and 50%. So the bias is to the upside, at least in an ABC, I think. And then I break it down into shorter time frames. I'm trying to break it down into shorter time frames. There you go, 4 hours. So what do I see on a 4 hour? Okay, I've got 1, 2. This is what I want. This is impulsive. Okay, this is my impulsive 3 up. Corrected 4. Did she ever go negative? No. Okay. So even though she pulled back in 4, she never even got to the 62 because the move up was so impulsive. Up in 5, I see a 3-wave correction down in ABC. Okay, and then I can see this moving up. Okay, to form this bullish formation. But I think that this is going to be mainly, as I said, I think this is going to be mainly on Swiss weakness as opposed to Euro strength, at least in the short term. And here I've got so I had an outside red, and now got an outside green, which is a bullish formation, and now got an inside red, which has no bias until the next candle. But all indicators are bullish. 1 hour, again, 130 was always going to hold. Treble big figure was always going to hold a little bit. 2 spikes. Okay, moved down. What did she hit? She hit the 15. What did we get off the 15? An engulfing green candle this morning. Everything is biased. Everything is to the upside. Your bias is to the upside. RSI is above, DMI is above, MACD is not showing divergence. Momentum is above 0, and you get an engulfing green candle. That it's not rocket science. You have to trade with a bias, and you have to look for engulfing inside candles off the EMAs, okay, to push you, to take you to the next level. Here, an outside green candle off the 62, off the 15. Everything is bullish. It's a strong trend. You can see the momentum is high. These are gapping, okay, and to the upside. While the bias is still to the upside, I'm looking for buy signals. I don't outstay my welcome. I want 60-70% of the trend. I don't want it all. I'm not greedy. When I think the trend is coming to an end, I stand aside until the new trend is confirmed. Sometimes the new trend isn't confirmed and I'm completely wrong, but at least I haven't sold it. I haven't put any of my money on the table. I put no risk anywhere. I only put risk on when I know that there's a trend, or I have a feeling that there's a trend, and my indicators confirm that I'm going in the right direction. If I'm going in the wrong direction, I'm not trading. And look at this one here. I mean, yesterday, huge engulfing 1 hour candle. Okay, any questions? Is that Steffi? Hi, Steffi. Any questions at all? No? Okay, guys. Thanks for listening. Thanks for coming along. Hope you're not sort of all blown away, or you think it's all too complicated or overcomplicated. But it's not an easy game. Okay, if it was, then everybody would be at it. Okay, good luck, and I hope to speak to you again soon.